Welcome to Dave and Dharm Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify. Welcome everybody to the Dave and Dharm Demystify show, and this week we have two very special guests. And shall I call them guests or shall I call them pirates? We're going to demystify SasScada, and to help us do that, we have Nelson and Matt from SasScada. Gentlemen, would you like to give yourself a brief intro, and maybe start with Matt first, and then Nelson, if you want to give yourself an intro and tell us a bit about the origin of SasScada as well.
Good to meet you. So, Matt Breadon, Chief Commercial Officer at SasScada, ex-banker by trade until I joined the dark side of the vendors, loosely worded, some of the fintechs in there, but essentially really here to drive the growth of the business.
Fantastic. Nelson.
Cool. Hi, everyone. My name's Nelson Wootton. I'm the CEO and co-founder of SasScada. You're quite right, Dharmesh. There is a slightly interesting story behind the name, and it all leads into exactly where SasScada comes from. So before we built this business, my co-founder and I built a bank in the UK. About 11 years ago, we started that project. I hate telling this story now because that number gets bigger every single time I tell it. But we are now at 11 years since we did that project. It was a bank targeted on people with low income. We were about 10 to 15 years into very low interest rates. Obviously, we're out of that now. But when interest rates were very low, the banks were very reluctant to give bank accounts to people on low income. They're not profitable customers. They're expensive to run. And my co-founder, Steve Round, he wanted to solve some of that issue. And so we set about building a bank that was going to be a lot lower cost to run. In doing that, we had to buy some core banking software, and it hurt. It was expensive, slow to deploy. It was very difficult to change and incredibly frustrating to work with. We scaled and sold that bank. And having come out of that project, I approached Steve and said, look, what I really want to do is solve core banking because I think everybody's doing it wrong. And I'll tell you a little bit about how we do it shortly. But the name's SasScada. So when we were building the core banking system, I was writing code at the time. When we were building the first bank, I was heavily coding at the time. And I was sitting in front of the computer trying to decide what I was going to call this project that we were writing. And I flicked back through some text messages I'd had with Steve. One of us had watched Pirates of the Caribbean while we were negotiating the price of the banking system. And the other replied saying, yes, we have an accord, meaning we've got a deal. And so I used the pirate theme all the way through. So the platform was called Accord. And when we came to set up SasScada, it was actually spelt a little different. It was SAESCADA, SasScada, which is a very old English word for state-sponsored pirates. So these are pirates that the kings and queens would hire to go and rob gold from other kings and queens. Thought it was a great name. So we changed the E to an A to make SaaS because we are a software as a service platform provider. And that's how we came to be, SasScada.
Yeah, what an amazing story. What are your parties like? Your office parties?
Yeah, exactly right. Yeah, it's always been good fun, that part of it. So yeah, look, the truth is we found core banking really frustrating. We refer to them as snake oil salesmen. We came against a lot of these sales guys who overcommitted what was possible. And then when you got into the project, it'd be available in the third quarter. Anyone who's built a bank knows you can't wait 2 quarters for functionality and feature. If you're building a bank, you need to move fast. And so in the end, we ended up building loads of software outside of the core because we could get it done and quicker to market than the core provider could. And that just seemed intrinsically wrong. The position was wrong. The way we are moving globally towards faster decision-making, higher agility, means those existing core systems were just not fit for purpose. And that's why we set about changing with SasScada.
It's amazing to me because just in that little 2-minute history, you identified a number of things that were well ahead of the market. Firstly, you were talking about financial inclusion in effect, right? With your first bank ahead of the market. Secondly, you actually talked about modernizing the core by building stuff around somebody else's not so good core, right? These are all topics that are like relevant today. I mean, what else is in your kit bag that makes you different?
It's a good question. I think it always sounds good being a long way ahead of the market, but sometimes it takes a little bit of time for everyone to catch up and go, you know what, actually, I think this might be the right way of doing things. So it's a little bit of a double-edged sword. The stuff that we do that's really different. Firstly, how we think about products for financial services, the products that they offer their customers. And the second is how we deal with and approach data. So one of the big challenges we found with core banking systems, and I'm guessing many people will have been in this similar place that listen to this podcast, it's a really big code base that is stacked layer upon layer upon layer. And it takes a long time to deploy because of that, and it takes even longer to change. There are numerous cores where you can dig deep, deep, deep down into that system and make a tiny little change somewhere, and then have this wave of cascading issues that go out where you need to regression test all of your accounts and make sure your functionality is working, on and on and on. And effectively changing and modifying your core because of these big code bases is risky. And it's done slowly and with reticence and only when you absolutely need it. That's not going to work for the banks of the future. They need to be flight of foot. They need to be able to move quicker. So the first thing we started to approach is how do we make products more agile, easier to deploy? To do that, rather than build, as is intrinsically done on almost all other core systems, where lending functionality, often where most core banking systems start, banks make money from lending money, lending functionality and lending accounts are tightly coupled together. A bit further down the line, a bank moves into doing deposit taking. First money comes from capital markets. Second rate of money comes from deposits. So the developers take that kind of lending code, flip it upside down, stick it back in and go, great, these accounts now earn interest instead of charging interest, right? And there's your deposit account. And the functionality's okay. It's not quite as good as lending because it's had more time and love on it, but they get by. And then a little bit further down the line, the counter bank wants to get into transactional banking. So the development team grab all of that deposit code, rip out the interest calculations and stick it back in and go, great, now you've got transactional banking. That, as an architecture, is what a lot of core banking platforms look like. And it is really expensive to change and run. Loads of code is duplicated. There's an enormous code base that sits underneath all of that. And because your accounts and the products themselves are tightly linked together, any little change to that functionality needs serious testing to make sure you don't damage or do anything wrong with all your existing accounts running in that area of the platform. So how do you solve that? We spent a long time looking at all the different attributes that make up financial services products. Do they charge fees? Do they earn interest? Are there withdrawal limits or penalties? Is there a window that the account can be funded, et cetera, et cetera, et cetera? On and on it goes. And then we built all of these different attributes into little building blocks. And then in our product system, you can combine all of these or any number of these building blocks together to build an account. So rather than the account's behavior and the account itself being intrinsically linked, the link between the two is incredibly loose. It's a very, very flexible link. It's one of the only pieces of logic we have in our platform. When you open an account, you must tell us what product it belongs to so we know how it behaves. What's lovely about this approach is you can add new building blocks in a couple of days. So if a bank comes to us and says, actually, we need these attributes adding to our product, we can add a new building block into the group of blocks, and you can launch a new product in there as quickly as within a few days. And what's really powerful about that is all your existing products just ignore this new block. They don't care. It's not a block that they're interested in or configured on. So your ability to change and innovate and add new things in is shortened drastically. No masses of regression testing, days, not weeks or months, or even quarters in some cases. So it's an incredibly different way of thinking about it. It also means that when customers come onto our platform, they can launch any account they like. We don't look to sell to them lending and then sell mod deposits and then sell current accounts. Launch whatever you like. We don't care. Our business model's built around the accounts we run for you, not what type of accounts they are. You make more money from lending, good for you. That's your business model, not ours. Our business model is a service provider. We think being very honest and frank about what you do is an important part of what we wanted to challenge. Complicated price lists when buying core banking were horrific to deal with, and they don't help anybody except for the provider. We really like nice, open transparency.
So when you say you can add any behavior, etc., it sounds like, if I get into kind of banking technology terms, that you separated the product, the account, the loan, whatever, from the actual ledger. Is that right? And does that mean
That's exactly
you
right.
can sit on top of any ledger, or how does this work?
The real power behind that is that to us, an account is multiple ledgers.
Right.
So it has to have at least one ledger, but there can be multiple. Classic example of that almost everybody will know listening to this is, of course, Revolut with different currency ledgers. Okay. There's, you can hold multiple currencies, but you can do anything you like with those ledgers. So one of our clients, UK bank, Alica, I think officially the UK's fastest ever growing fintech. They have a current account with an overdraft on our platform, and then they have a savings wallet that bears interest inside that. So you've got a transactional account with a revolving credit feature sitting on top of it and a secondary ledger in there that bears interest. So your ability to bring product functionality down to individual ledgers within an account is also included. It's an incredibly powerful feature. We can use those sub-ledgers to join different cards into the platform. So you could use it as an expense card for employees if you are an organization that needed that kind of functionality, or parent-child cards, for example. And you can have multiple account addresses within the single account. So you can have different wallets that have got different IBANs or sort code and account numbers attached to them. So there's a whole load of very clever stuff you can do in there.
Yeah, the one that we've got to mention there, Nelson, was the offset ledger. So within that, we can, the loan that we don't charge for these multiple ledgers, which sit underneath the account, an offset ledger. So we can actually shadow another platform to do an offset ledger to it, or we can be that ledger at the same time. So there's some ultimate flexibility within the platform at that reduced cost point.
It gets super interesting when you deal with things like card processors as well. So we like to sit in the authorization chain. So we don't run a separate balance table anywhere that we upload or change to a card processor. The actual request for the transaction comes to our system. And when we do that, it allows people to leverage other assets they may hold. So these individual ledgers, they could hold gold, coffee, cryptocurrency, foreign currency. Makes absolutely no difference to us whatsoever. And you can configure the platform so that every time you buy a coffee from Starbucks, we sell a bit of gold that you hold to pay for it, right? So there's some really, really cool things that you can do that genuinely provide real innovation in the market.
It's kind of interesting. I mean, going back to, you mentioned Alica there, but I mean, I guess one of the things I'm interested in from a kind of sales point of view is that flexibility. So Matt, when you're kind of pounding the pavement, looking for kind of deals and things, are people open to that? Do they get what you're trying to do in terms of the flexibility? I guess, why did Alica think you were the kind of right partner for them? Because banking still is a very traditional business where I think a lot of people are still, they worry about flexibility. That sort of feels like a new frontier. So I was just kind of interested what you're, from a kind of commercial point of view, what you're hearing and getting back from the people you're talking to.
It's a twofold thing. I'll let Nelson explain the Alica piece because that was slightly before my time. But essentially, I think the product flexibility in terms of being able to expand and grow, pivot your business, change is really pivotal to the new companies, which are really testing the market at the moment and don't actually know until it's proven what works. So that is actually a really key USP for us. What's the part of that Nelson was going into the detail about of how we actually handle data and how we're structured on CQRS, and we can go into more detail on that, is actually the real power of the platform, that event stream and how we do it. So we aren't the same as the traditional cores and even the new cloud cores, which all they do is replicate what legacy has done, yet in the cloud. as one of my posts said previously that's gone out there, we're not the faster horse. We are the Henry Ford new car that's come out. We've totally changed the way that things are structured and architected within a bank. Now, to come back to your point, Dave, that is the point that is difficult for people to come and make that leap. So the leap that they do actually get is the product piece. The leap around how we structure data is the part that is taking the longer time to actually get people to understand and move from that. Everyone still sees buying the faster horse, right, until the people start moving across, like Alica has, and I know Nelson will go into the detail about that. But once you understand what Alica have done and how they've really used the product and our other clients, that's where the real power gets driven.
Alica's interesting. They are as much a tech company as they are a bank. And of course, they're not here to speak for themselves, but that's what they look like. And the reason we were chosen, they like the tech, they like the approach, they like the team, and they felt like we did that there was something intrinsically wrong with core banking currently. We got on that basis. We launched a current account with them, features I've just mentioned. And then because of the way we structure our business commercially, they came back to us and said, is it possible to start moving our deposit accounts across to us? And are you going to charge us any more for doing that? And we were able to say, yes, it is absolutely possible. And no, we are not going to charge you any more money for that. And that enables them to turn off one of the cores that they're running at the moment. That's an incredibly powerful thing for them to do. But in many respects, it's the second USP that SasScada has that makes it super interesting for organizations like Alica. And it's how we handle and manage data. So one of the frustrations we had when running a bank was reporting. We found we spent a staggering amount of time and manual effort pulling together reports from multiple different databases and sewing it all together in order to report to the regulator, to the board, management information, all the stuff that you need to report on as a bank. It's very difficult to reconcile all of those reports because they're all run at slightly different times and run through different manual processes. And it just seemed madness to me. It's all ones and zeros. It should be absolutely possible at a moment in time to go, right, this is the report. They all reconcile. This is how it works. So we really wanted to change how people thought about that and to enable banks to get proper access to data. So to do that, we actually use an architecture called CQRS, and anyone who's actually interested in that can reach out and we'd love to tell you more, but I'm not going to bore all your listeners with the tech of that. What I'm going to kind of talk about is some of the benefits of it. What it really means is that we utterly separated the write side of the business in data terms from the read side of the business, which means you can scale these two completely independently of each other. It isn't a singular database that you have to scale because you're doing lots of reporting at the moment or lots of transactions at the moment. These two things run in parallel next to each other. All of the writes into the database are done via unstructured data. So it's a NoSQL database. We process every single transaction, whether it's from a card processor, a payment, or a customer sending money via unprocessed data. We normalize a few bits of that data to make a decision on whether we're going to do the transaction or not, but we store all the raw data that came in with that transaction. Then we have an eventing system that takes those events that have happened over here, unstructured, and it applies a data template to each event to build a data view. And a data view is a structured SQL database built for a specific type of reporting or a data set you want. So the APIs that we give to our customers are actually populated by this process, as are the management information reports a bank wants, the regulatory reports a bank wants, and in some cases, Alica actually being an example of this, the cashback rewards you get for using your card. All of these reports are populated in real time, transaction by transaction, as they flow through the system. We can give you a real-time stream of all of these events if you want them, and in fact do that with Alica. They get literally every time anything happens anywhere in the core, they're getting a stream of these events. What's really powerful about this architecture is the silly example I'm about to give you that no one's ever done, but it's useful. Imagine one day the chief exec of the bank wakes up, Richard Davis in this case, and says, you know what? I would like to know what the weather's like when any transaction happened into a bank in our institution. You can go into the eventing system and enrich transaction data with weather at time and location transaction happened and instantly have a new report. What's really cool is you can then take that template and apply it to all the historic data we've ever processed. So you can ask new questions of your data again and again and again. When the regulator says, I now need to see this from you guys, build yourself a new data view, apply it to all your historic data, pull out the data you need. Every time you ask a question of data, you always have a second, third, fourth, fifth question. Well, ask those questions too, and keep running those questions in our system. That's the real power.
Is that done on a separate data warehouse or is it done on the actual transactional system?
It's all inside the same platform, but on one side, we've got unstructured data that keeps all the raw metadata that we get anywhere. And on the other side, you've got this eventing system in the middle that goes, oh, Nelson just spent some money. Grab that transaction. Okay, what templates have I got to stick this through? Right, there's a management information one here, another one management information here. I've got this reg report. Oh, I've got a loyalty report to populate as well. So it grabs that one transaction and creates data in all of those 5 different areas, as an example, in the format that you need it in. And it's completely separated. And in fact, you can throw all of that away. That's a brave thing to do, but you can rerun those templates at any time against the unstructured data. It's your ability to keep asking questions in real time and run reports that actually reconcile against each other because they were all run at the same time, transaction by transaction. It's incredibly powerful.
I mean, I'm just like, I guess my mind's been slightly blown, and maybe I'm like small brain, so maybe I'm not quite getting what you're saying, but if you take Alica, I guess they focus on businesses. So with your example of weather, like it's been raining in the UK for the last, it feels like years.
Ever.
But if you're a farmer, that can have devastating consequences on you. But Alica could be in a position where they can match kind of, I don't know, volume of transactions from their farming customers with the weather and then say, well, actually, like every time it rains, they stop spending. We could then do some outreach to them in terms of a particular product, or we could dial up cashback or something like that to them.
Right, exactly. Imagine, I don't know what it costs to process a check in a bank these days, but let's imagine it costs £2. And you can see that Mrs. Jones pays her cleaner that comes in once a week, 10 quid, and she pays by check. And then what you could do is go, you know what, Mrs. Brown, here's what I'm going to do. Every time you pay your cleaner electronically instead of by check, I'm going to pay you £1 to do it. And I'm going to do that for the next year. And you know, Mrs. Jones at the end of a year of doing that isn't going to use her checkbook again. You could start using this kind of intelligence to nudge people's behavior in a positive way, not a negative, punitive, we're going to charge you way, but here's a reward because we both win if you change your behavior. What Alica used the projections for in real time is to provide cashback rewards. So there are a set of criteria for using your card. And if you use your card, we have a data projection that runs on the platform that collects those transactions and applies a cashback reward to customers for the usage of that product. And perhaps even more interesting is this ability to see what's happening in real time allowed Alica to see that lots of people were opening the current account, but not really transacting. And what they were really doing is getting access to that savings wallet as a business. And once they saw that, they doubled down on deposits and went, hey guys, actually what you guys are really after here is somewhere decent to put your money for periods of time. And that was a massive success for them. Huge success in a few days of launching that. So your ability to understand and see your behaviors. I found it really frustrating that CRM is seen in a bank as the source of information about a customer. I think it's the transactions and behavior that really describes what the customer needs and wants. And that information's in your core banking system. It isn't in your CRM.
Yeah.
Totally.
Sorry, that's a bit mind-blowing, isn't it? I did tell you it was a terrible...
Yeah, we're slightly stunned into silence. So,
I mean, look, I did a thing a while ago around what I call the single brain. And essentially, it's like an eventing thing that takes events for any part of the organization. So instead of making a decision about whether I'm going to do a fraud check, an AML check, a credit check, a balance check. All of these things happen on every transaction. And then I wanted to load up some marketing things. So if they spent X amount, then I want to promote Y. The problem is there's enough going on just to get the transaction through, let alone any marketing, right? And what I was told is, oh, by the way, the marketing data sits in the CRM database, which, we can't do in real time because you're not going to get a response back in time. And I'm like, oh, that's really one of the key use cases behind my event engine stroke single brain, right? And what you're telling us is that you can do this today in real time.
Yes.
Phenomenal.
And customers are. And so people like Alaka are feeding it into their data warehousing, their marketing, their product information in order to build a much more accurate picture of what their customers are up to. And let's be honest, as the UK's fastest fintech, it clearly is working for them.
Yeah, because Dave, you'll get this, right? Is what's happened in the past is that something happens, you do a transaction, and about 2 weeks later, you get something as a leaflet in your statement to say, oh, by the way, here's a discount for roadside assistance. Well, that was because of a transaction 2 weeks ago when I got my car serviced, right? I've got no, as a customer, link between the two events. So this promotion is almost irrelevant. But when you can do it in real time, just seeing you spend some money in the garage, would you like some roadside assistance discount? Well, that's the perfect point to sell that product, right? Because I've already just spent some money on the car. Next time I can mitigate it with this insurance, right? And banks haven't been able to do that because the query lives in this database, which has been on old technology and just not possible, right?
Exactly right. Exactly right. It's a really cool system. It's good fun to work with, and it does stun people. It's like, wow, this is a totally different way of thinking about how we go about our business. But when you get it, the power it unlocks is incredible.
I had a final question, which is like, this is great. I've spent my career as a sort of UX marketing Johnny in this mad fintech world. And to hear you talk about these things and to hear what Dharmesh just says, it's like, well, actually, maybe my time has come. Maybe the time has come to... Let's not worry so much about the technology. Let's worry about innovating, doing things in real time, actually talking to our customers in a way that they really understand because it's based on what they're doing and up to, And I love the energy that you bring to this. And I love the fact that what you've done is you've reinvented a platform based on your kind of experience. But I listen to you and I'm like, yeah, I need to wind back my career 30 years and all the things I was screaming about, like we should be doing, they're kind of there. I'd love to be 30 years ago at the start of my career thinking about this because it's exciting. This is really exciting. The opportunities to change people's lives and help businesses, and I think are just enormous because you can take add a new dimension to banking, which I think is brilliant. So, it's fascinating to hear. And, we'd love to talk to Alaka about their experiences as well, because it sounds like they're very much at the kind of cutting edge of what's going on. So how do organizations sort of change to and adapt to this new world? Because this is different from the old world, isn't it?
It is very different. I think digital transformation is a word that's floated around this industry for, oh my God, as long as I can remember. And I've got plenty of grey hair for people not watching this on video. But I think that was all about dressing things up. And there was some genuine innovation in UI, but I still got frustrated, even when I was in charge of some of this stuff, by the fact that the core data wasn't readily available to me, and it really should. In this day and age, there's just no reason why that stuff shouldn't be alive and being delivered into my data dashboards over and over again, so that as somebody who's running product, I can see what's working and what's not working and pivot accordingly. That's what banks are going to need to do to build success. That whole idea of throw it out there and leave it for several years until it dwindles away a bit and then we turn it off, losing customers in the process, that's not the right way of doing it. The customers aren't happy. How do we pivot, change? We've finally got a relationship with a customer. Now I need to double down and do something meaningful with this relationship. That's the power.
For bringing this into the larger banks, right? The key for us is our price point allows this coexistent model. So take us as an iterative approach, and you build your teams out and you build your data scientists and how you really use this and gain it in an iterative fashion. And that is the price point allows that coexistent model.
Amazing. It's a great story. So thank you so much.
Genuinely, we don't often get a mic drop moments in these podcasts, and we definitely had one today, because this is, for us, is very exciting. What you're talking about are the kind of things that we wanted to do, but we were always told that the system doesn't support it. We can't do it in real time, et cetera, et cetera. So generally, well done. Looking forward to hearing more about this. And I can't believe we've gone through a whole show and not had a single eye patch or parrot on it, you know?
Thank you very much. Great
Thanks,
chatting
guys.
to you.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.